In this video, I'm going to talk about the Financial Accounting Standards Board Statement number 3, and we're going to continue our discussion of LIFO, FIFO, interim financial statements, etc., etc. Now, this thing has gotten really long-winded and whatever, because not only does it have very complex vocabulary, but it starts referring to another set of documents that are even harder to come by than the FASBs. First of all, I got this in the mail today. This is a book of FASBs. Get it, folks. You need this. You need it very badly. This is like gold. I'm telling you what. You have one of these, you might as well be holding a bar of gold. Alright? And don't stand there and say, well, these videos will replace that. My videos will never replace this. You need to read these. These are, wow. They're nice. Alright. Now, there was something called the Accounting Principles Board that was founded before FASB. Okay? And they have statements, and I'm going to try to get a hold of them. I'm doing my best. It's kind of hard to get a hold of them. But this is what an APB opinion looks like. And you need to get a hold of them too, because FASB often refers to this, and if you don't have that, you won't understand what they're trying to tell you. Alright? But enough about APB and FASB. You need to get them both. They're like weighted gold. Keep them. If you get them, keep them, and hang on to them tight. It's like gold. Alright. Now, what about an income statement? Well, when we're talking about income statements, we're talking about a period of time. When you're talking about a balance sheet, you're talking about one particular day. Hey, my company looks like this today. It'd be the equivalent of you taking a digital camera, going outside your business and taking a picture of it. Pachink! And that's how it looks. Income statements don't look like that. Let me tell you something. It's just like spring. You go out one day in spring and the trees look dead. You go out a couple weeks later and the buds on the trees have suddenly come out, and you can see what's going to happen next, because these little buds are going to grow into leaves. You go out a couple weeks later and they're leaves and you got tons of shade. Alright? That's how an income statement runs. Let me tell you something. When you say on a balance sheet, this is my company as of December 31st, 2009, that's how that company looked on that day. When you have an income statement, you'll say, this is an income statement between March and June of 2009. That means it encompasses the entire 3 months. It shows the 3 months of activity that have been going on between March and June. March 1st, June 30th. Okay? And when you have a situation like that, a lot of things change over that 3-month period of time. Now, let's make things a little more complicated, shall we? Let's say you owned a piece of land. You built a building on that piece of land, and some guy came up to you and said, look, I want to run my business out of the building that you've just built for a year. You say, okay, I'm going to charge you $25,000 rent for a year's period of time that you'll pay in increments of whatever, until you pay me all that $25,000. Now, in accrual accounting, which I talked about in a previous video, you would say, I've earned this $25,000. Even though you don't physically have the money yet, you've only gotten a certain part of that, you're saying, I earned $25,000. Alright, and then later on, you're going to feed that $25,000 from unearned rent to your cash, and you're going to keep feeding it until all of it's paid to you. Alright, now, this also kind of works with merchandise inventory. This is where we get into LIFO and FIFO. Alright, now, remember, we're talking about accrual accounting. You have gone out, you've ordered a ton of bicycles for your bicycle shop, and the bicycles have shown up, and you haven't exactly paid the bill yet, or better yet, you are the manufacturer of the bikes. You've shipped out the bikes. You're anticipating a payment for those bikes. You haven't received all the money yet. Now suddenly you change from LIFO or FIFO to LIFO. Man, you talk about a big old change. And that's what was being talked about in the FASB Statement number 3 as to how to account for things like that. Not only are you accounting for a 3-month period of time, but you also then have to account for the fact that you've changed an accounting method in that 3-month period of time, and you have to show what happened. You have to show what the value would have been under one method, and then show what the value would have been under this new method that you're now using. And that gets very complicated and extremely tricky. And I will cover more about this in a future video, so stay tuned.